So as you know, my channel is really a lot of times about how to make money online, and I teach other students how to do this as well. Pretty much you see a lot of product reviews on this channel too. And the biggest question is can I afford all this stuff? Definitely by making money by selling things such as on eBay, on Etsy, and specifically I did some day trading too. And I want to talk really about into day trading, into trading stocks, into making money with stocks, and being honest with you about, because a lot of people see all those instant millionaires right now, Dogecoin millionaire, cryptocurrency millionaires, people who invested this, put all their money into it and got lucky. Pretty much 95% of the people who trade, get into stocks, play with it, end up either broke, quit this game, or lose it all. Really. It comes down to that. 5% make it great. Maybe some of them become rich. Those people figure out the game. And it takes time. And at what point of my life I try to figure out the game. So to figure out the game, what you have to do is read every single book about the stock market, which as a history major I actually did. Study charts. Study the great people that know about stocks. And then of course you would think, knowing all this stuff, you go in there, play the game, and boom, you win. No, no, no. This is not how it goes. And you have to have $25,000 in cash, and I'm not joking, to play this game. Because if you play it in a Lego stock market, not crypto, what happens is 3 round trips, buying and selling. You have to settle. And if you don't have $25,000 in your account, you don't settle. And if you don't settle, you're labeled as a peddling day trader, meaning your account is locked. And you have to forcefully liquidize, get rid of your positions. Or it gets locked for 90 days. Yes, you can still trade with cash money, but you cannot do margin, buy and sell. So pretty much positions go against you and you can get stuck in a lot. You have all those awesome positions opening up and you're locked for 90 days and nothing you can do about it. So, key point, get to $25,000 would be it. But that's not that easily, because if you go on a losing streak, and this is the same as going on a winning streak, at one point you're like winning every single trade, and then you go all in something and then bam, and everything vanishes. You go under $25,000 and you're done for a long time, unless you make more money at funds, borrow more money from somewhere else, which I don't recommend for you to do. And it's bad. It's really bad. So books, everything that you learn about day trading, reading the news, reading all those rumors, listening to rumors, listening to tips, all this stuff is garbage. Because unless you have skin in the actual game, you're not playing the stock market. Unless you're playing real cash, you're not playing the game. Regardless if you like or dislike President Trump, although he's no longer president, Biden is in, Trump helped us with one thing. It is known as fake and planted news. And one thing that the news media is doing is planted news. All the news that you actually see here has been planted with people who have way more money than you. The reason why they plant all the stories in here, they pretty much put them at the top. There is reasons why those stories are at the top and other stories are not showing over here. So why are GameStop, AMC stock, being shown at the top of the screen here? Pretty much those are the kind of stocks that make the news. And because they make the news, all those ticker symbols and everything else shows one thing. Those are the stocks that are most likely eventually to go down, because suckers like you are gonna go here and buy all those names. Not everything, not all of those stocks are bad. But if they're shown at the top here, those are popular stocks. Some of them are not so bad at all. Those are popular stocks. Some of those stocks, the trending ones, like GE, like Apple, like Ford, those are big companies. They're not going to go up or down pretty much big. But when you see small names pop up here, such as GameStop and Robinhood, Benz, AMC, and stuff like that, it shows where the money is happening. Well, it is going to be moving as well. So Tesla disappoints Wall Street despite strong profits. And we have right now, going to a different one, Fox News right here, showing us the stock soars in broad rally mode. So it tells people that, yeah, stocks are doing well. And because they're doing well, should you get into stocks? And people have been asking me nonstop, is now the time to invest in stocks? Is now the time to get in Bitcoin? And you can see all those headlines are coming directly from the news cycle. And here is another one, another way to find the next potential short squeeze. This one is actually asking for it. It is showing you this is the place that you should be getting. And it's showing you which ones. Now, to get in, they want you to subscribe to this magazine. And guess what? If you do subscribe to it, you think you're going to get really good names? Unlikely. Most likely, those are going to be exact the tickers that are going to go down for sure. So what can be learned from this? Printed news over here that you see and read, most likely is not going to tell you where the stock is going to go in the future. If you really want to know where a stock is heading, Google is your friend. Let's pick a stock. Ready, stock. All we have to do to find out where it's heading, and it's called the earning transcript. Press on search, and we're just using this as an example. Going into a transcript, we can have right here every single transcript of this company, and every company can do the same thing, sometimes on its page, and you can read the latest one. And in most cases, this is probably the only real indicator. And this is going to be exactly what you need to read and learn to find out where a stock is going to be heading in the future. Everything else is just pure speculation, or even worse, manipulation. And it's like a casino. The more you play, the better you get at it. And the more you play it with real money. And I'm talking about, there's so many gurus out there teaching you how to do this. They don't care. If you're a millionaire, you put money into the stock market, you can play. Why? Because your emotions are not on the line. As soon as your emotions on the line, you put money in there and it starts to go against you, and you panic, and you sell, and you get out, you lose cash. It is pretty simple as that. If you can't control yourself, you can't control your emotions, you can't sleep at night, you can't play this game. Especially gamble in the stock market, especially short-term playing. The more short-term you play, the bigger the moves, the bigger the losses, and the bigger the wins. Bigger risk, more risk, equals more reward, but also means you can lose it all as well. So this is something people don't get. And when you see all those millionaires, understand, those guys got lucky. The people who are broke and lost it all, you don't see them in the news because they're few. Because it's not a fun story to run on this guy who lost it all, and including their house, by playing naked shorts, by gambling and playing on margin. The people who won it, who won big, they gambled big. And that's not the way you play the stock market. It's not a gambling ring. It's not a rigged casino. Although with options, you might say it is. And I have played options too. You can win huge. You can win big with options. And how do you learn how to play the game? How do you get so good at this? You move from $5,000 at one point. I had 25,000. I almost lost I blew the whole entire account playing the stock market. So today's play went totally against me. I'm actually down a few bucks on this trade, which is the GameStop trade right here. And in a day's range, I bought this at nearly the top of the day, which I shouldn't have. I should have waited until the prime time to buy, which is around 12 o'clock, to get this stock option, which is pretty cheap right now at around 35 cents. It used to cost around 85 to maybe up to $1 to get this at the prime of the day. So right now I'm losing cash on this trade. You can see the implied volatility is a whopping 899%, which is very high. And you can see the theta. This is the decay of this stock. It's not too bad, but it is going down. And as the time goes, the decay makes the value of this stock move down all the way to zero. Because it is a weekly play, it means that it's going to expire in less than a week. When it expires, the value of it is going to drop. So what is my exit plan for this? It is pretty much to probably wait either until the end of the day and see if it's going to spike up, or to wait until Monday. So in the stock market, you have to understand that not every trade is going to go the way you want it to, and most than likely you're going to get losses. When you get losses, the best thing for you to do is pretty much to sell, to get out. The faster you get out, the better. If you don't close the position, a small loss could become a huge loss, and you're going to be losing more and more money. So it is your job to minimize the losses. And to make your wins as large as possible. And this is the only way for you to win in this game. So what am I going to do? I might just go ahead and just get out of this trade whatsoever. But not right now. I have to wait just a little bit. I know that if I wait maybe an hour or two, I'll be able to get out and close this position at a much more higher break-even price. Because it is just an option. Its price should go much higher at a different time of the day. And hopefully if this stock drops much more at the end of the day, then definitely it's going to work for me. But if it keeps on increasing during the actual day, the value of this is going to go very low, and I'm going to be losing 100% of everything that I posted right into this stock. Which is a small bummer, but it's better to bet and lose a very small amount than go ahead and lose everything on an option trade. It was bad. And I didn't have any job at that time too. I thought I could do this for a living. No, wrong. And no, you can't do that. Because if this is the only job you're doing, you're playing it wrong. Stock market is not the game for it. But playing it on occasion, swing trading it, is great. And eventually I figured out how to play this game and I made pretty good money. Now, I don't want to jinx myself because I haven't sold this stuff I'm in right now yet. But if I do, it's going to be a good cash out. But now I'm just waiting. And it's like a chess game. Playing stocks is like chess. The more you play, the more you practice, the better you get at the game. Learning from people's mistakes is more beneficial for me. Learning from my own mistakes was even more beneficial for me than every single book I ever read. Because, guess what? A book that's written 2 years ago has nothing to do with how the market works now. People who are good at this game a few years ago are not as good as it right now. Because the game always changes every single time. Now, there's few things that stay the same. The concepts, the charts, the theories, all those computer programs that make the stock market. And you know what? It's not really traders anymore. It's a huge amount of computers that play against each other. And chart patterns, they work. Why do they work? Because every single one of those computers plays the same exact chart playing, same exact value. They all play under the same game. Meaning, if you can read charts, you can figure out charting, you can figure out the game of stocks way better than anyone else. And that's what I have been doing lately. I've been studying that. I've been studying the charts. because the charts work way better than a lot of other things. I also been studying indexes, and I also been studying how the indexes themselves, let's say for example the gold index, works way more better than the gold stock. How oil index, the price of oil, is so relevant to the performance of oil stocks, and so on. So learning about stocks, and there was so much to learn, there was so much information to learn, is what is going to get you ahead, is what going to really teach you a lot about the stock market. And of course, I made some classes about it too, because this is the stuff I learned. This is the stuff that I did. It's a mistake I did, things that I did that I shouldn't have done, because it cost me a lot of money. And if you're just getting into this game, don't even play with your own money. Play with stimulated cash. There is accounts that you can do this. And as you get started, learn from mistakes. Make all the mistakes you want, because it's not your money. It's no one's money. It's stimulated. It's fake stimulated cash, like monopoly money. Then, once you're comfortable, you play the real game. And really stay away from crypto. I can't emphasize this enough. The crypto bubble, pretty simple. Mainstream, it just went mainstream. People who know nothing about been asking me for opinion. They've been asking me, and I have thousands of students, thousands, hundreds of thousands of students, and they ask me for opinion, well, about cryptos, and people who know nothing about. I have never had that almost happen. I'll into it. And specifically, crypto, when it got to $60,000, there was a lot of people who were really interested in buying it right at the top. Right now, it's in the correction mode. It's gonna wipe out a lot of people. A lot of people. It's gonna get wiped out. And when they're all wiped out, that's when this thing is gonna go sideways. It's not gonna go up. It's gonna go sideways until the next time, until the next bubble. Because those people who got wiped out don't have the money anymore to play with crypto. Because of that, it happens with stocks. Stocks play almost identical to crypto. Stocks and crypto, there's almost no difference between both of those. And that's what people don't understand. They think crypto is something different. It's not, and doesn't play like a stock market. It does. It's almost the same. And it's playing with the same index funds too. There is an actual index, crypto index. And it actually, once that thing goes down, the crypto index, all the different mini cryptos go down with it. And you might not think it's related. It is. You know why it's related? Because all the people who invest in the main crypto Bitcoin are also investing in the small stock. In the small, and it's not even stocks, in the small Bitcoins. And it's not even money. Cryptos, pretty much it. They're not even supposed to be called coins. It's basically a space in people's hard drive. Electrical space. It doesn't actually exist in real life. It's pretty much renting space, and they're doing all this simple math equation. They're creating coins, but basically they're just sitting inside hundreds of thousands of different computers and using unstored areas in every single computer. There's a lot of computers out there who use it, not every single one, but the ones that are mining the cryptos. And pretty much that's it. That's what you own. You actually, when you're buying crypto, you own the actual mining space inside of people's computers that are not even yours. Just imagine if shit hit the fan, real scenario, if the sun sends out this ray and there was an electrical storm in the 1800s that made telegraphs, set them on fire. It made in New York City the sky turn totally, the lights totally different. And if something like this happened today, a lot of civilization might actually get wiped out because we rely on computers so much and electronic devices. Just think what's going to happen with crypto. All this stuff is going to go to zero. pretty much because a lot of those computers are not shielded from those things, and people who put money into those things, there's going to be no records of it. There's going to be bye-bye. It's going to be all gone. Now the likelihood of that happening is pretty low, but I'm just saying cryptos is just not a good thing to invest in. Now, if you want to buy and you want to gamble, cryptos is a gamble. You want to wait until everybody is out, until nobody cares about crypto, until you see things in the news. And that's what I teach you in some of my classes, how the psychology of understanding the mass market thinking. And pretty much you see in the news people don't care about anymore. That's when you get into it. Thank you so much for watching. Hopefully you learned something new today, and this was my confession of day trading. I don't know if it was good or not, but let me know down below what you think, if you would like to see more videos just like it, and hopefully subscribe to this channel, and see you in the next video of the Geek Tech Show. You never know what is the next video that's coming up on this channel. Hit the thumbs up for me. See if you can destroy it. Some of the most juiciest, and I mean the best looking charts that you can actually find are called the Parabolic Chart. This is like the golden nugget. And what specifically you're looking for is to find one at base 5, which is actually the sell point. So for example, we have right here an example of a parabolic chart. Pretty much what happens is that over time, and this could take years for this stop to actually form, the chart itself explodes to the high top in a very short period of time. So here is a very good parabolic chart over here of a specific stock. And sometimes you will see that they have the same patterns. They happen. History repeats itself in the stock market. So those names, if it already had a parabolic top to it, and we could be looking at 10, 20 years ago, 15 years ago. This specific one was 20 years ago, and it had another top in 2018. So you might actually think that, yeah, if I get this, and this was a penny stock a while back, I'm gonna get rich. Not really. You gotta get in here and short it at the top, or get in long before it explodes to the high top. Examining the charts is one thing, and we can see with Bitcoin, it had its way too. Look at this there. This is from the 2018, and it jumped all the way to almost 20,000. And then it went 40,000, but before giving a huge haircut to the shareholders. So what do we learn here? Pretty much the simple thing. If you want to make money with parabolic chart patterns, you have to get in, get out as fast as you can, because those movements don't last too long, specifically at the top as well. And depending how long for this base to actually happen. So how do you find those things?